that's like a lot of management. Too
Yeah. I mean, I
much.
guess you could just leave one on the back burner. I don't know. Yeah, I don't know how that would work. I don't know if there's even podcasts on Twitch. I have no idea. We're live, people, and we already got some viewers in the chat.
When you
You know what? Real quick, Brad, will you say
Yeah.
something? Okay, yeah, you're good. I'm
Yeah.
just making sure your audio is working.
Tuesday, not a Wednesday. That's my fault.
Yeah, Brad kind of sucks this
I
week.
bailed on tomorrow.
Yep, he definitely sucks. But hey, can't hold it against him.
I did say that I would change my plans if tonight was bad for you.
Yeah. No, I'm free tonight, dude. Let's rock out with ooh.
You know what's
Hey. Hey.
Hey.
So what's up, guys? I'll tell you what. This is cool. This is a lot of fun. I'm excited that as soon as we started, we already got 16 to 20 people in here watching. I mean, Brad and I, we just started this a few weeks ago.
Yeah.
Hopping on live streams while we record the podcast and just kind of trying to intertwine the different social media platforms and have a good way to connect with people. And it's nice to be able to kind of interact with the chat during the podcast. It gives it a little bit more freedom, I guess. It drives conversations a little better. So it's cool.
One thing I wanted to ask people in the chat, for those that have been here, do you notice the edits that I make from this episode? Like when we go live to the edited one, can you tell? Because I've been cutting almost 40 minutes out, and I want to know if it still sounds like I'm keeping it pretty smooth, or if you could just tell that I'm cutting grass clipping stories and shit out of the live streams.
I mean, I say here's my thing, dude. Like Joe Rogan and those guys, theirs is pretty much just, I mean, it's bare minimum edits, I feel like. And his stuff's 3 hours plus long.
Oh, dude.
I just feel like we should just let everything ride, and then it's whatever happens. The
One
more
day.
natural, the better, I feel like.
One day, I've been working on that. One day.
I mean, we did leave a 30-minute grass cutting story in the other day, so that
was relevant. You were trying to spend money.
Yeah, that's true.
Are we talking about? Are we gonna recap the challenge, or are you doing a video on it this week?
We can recap it. Yeah, I plan on doing something on Friday for it.
I didn't wait. Let them wait.
Okay.
Let's see. We'll get to some questions because we're gonna do some voicemails tonight too, so that we lined up. But we'll get to some questions in the chat. Do you think we're heading for a big crash? Feel like it, but don't know what to do. Jay, it might have happened already. We wouldn't even know.
Yeah, I mean, it's just so hard. It's so hard to call something like that. I mean, I don't see what's going to happen in the near future to cause a crash. I just don't see it. We have inflation happening right now, but usually when you see inflation, we're not talking hyperinflation here. We're talking just inflation. And usually when you see that, that's usually pretty good for stocks because businesses can turn around and use that to their advantage, So I don't know the catalyst that's going to kind of, be that nail in the coffin to actually start a crash in the market, unless the only thing I can think of is this Delta strain. If something crazy pops off about that may do something to the market because that's the main reason why we saw that dip yesterday was the scare of that. Cases starting to rise and whatnot. Other than that, I don't have anything really in my mind that's is the market way overvalued? Of course. Look at the Shiller PE ratio. Look at the Buffett indicator. All the metrics are showing we're a way overvalued market, but that kind of leads to what I was saying, I don't know, was it last week maybe? Talking about how we may just see a very slow, volatile bear market over the next 2-3 years. We just may not even notice it, and the S&P just kind of up and down, and then a little lower, up and down, a little lower, up and down for the next 3 years. And no one, and that's when, but here's the cool part about that. That separates the men from the boys in picking stocks. I've never I've never picked stocks in a non-bear market, in a non-bull market. Have you?
No.
I would guarantee you most people on YouTube today did not start investing prior to 08 and 09. Just only because I say that is because most of the stock YouTubers I know out there are
your
30,
age?
are 33 and under.
Yeah.
So I mean that, and when I graduated high school was 2009, and that was just right out of the financial crisis. And I didn't even know what really the hell was going on in 08 and 09. I mean, I knew a little bit was going on, but I mean, nothing like I would pay attention to it now. I mean, I was just getting ready to go to college. I wasn't even focused on any of that stuff.
I'm glad you mentioned time too, because when I said like, it's easy for us to be like, who knows? But I think if we're going to put some real context to it, if you're not looking to like majorly change your financial situation as far as income wise, like retire in the next 5 years, I don't really think it matters.
Yeah.
Even if
I agree.
even if we go 5 years and you continue to work for 5 years and you retire on the fifth year, pretty good likelihood it's going to start to turn around. And at that point, you'll be at maybe some lows. So I think if it's not within the next 5 years, I don't think it really matters.
Yeah, I agree. Quick
Chris
shout out.
Blair said, "Is it Miller time?"
Oh, speaking of that, I got a nice little story for you guys during the podcast. Speaking of, I don't know, but a quick shout out.
Okay.
To Heidi.
Oh, yeah.
First order on the merch. Guys.
She said in the Discord she was trying to be the first one, right?
Average. She posted on Facebook today. She was the first
Facebook
one.
Facebook was, yeah.
And just let everybody know, we came out today, officially got it done with the Average Money merch.
You got it done. I didn't do anything.
Well, yeah, I mean, I have experience with it. So yeah, guys, there's a link pinned in the chat. It's a cool way to kind of help support the podcast, and kind of rep the Average Money community.
Now, full disclosure, I've never worn Teespring clothes. Really, you have.
Mm-hmm.
It's good stuff, bad stuff.
Yeah. So
pros and cons, like full trend, like because I know your options were probably limited when we use Teespring. What anything that people should know, is it true to size, things like that? Size
is pretty good. So I went ahead and did the premium shirts and the tri-blend. So the tri-blend I have not ordered. I'm gonna order one either tonight or tomorrow. And I'm curious I'm gonna guess it's better than the premium, because the premium, I forget, it's like 100% cotton, but I think there's some sort of blend in there. I don't know, but when I did Drink Beer by Stock stuff, which I still have it, I have all premium shirts, because there's like classic tees, which like your Gildan shirts, the kind of ones that like fit you like a box. Then there's like a classic tee, then there's a premium, then there's the tri-blend. So for our merch, you can choose either between premium or tri-blend. I think they're both the same price. But I personally like tri-blends for t-shirts. I think those fit the best. The one thing I think that Teespring could improve on is the print. So like, you see guys how this shirt is kind of like printed on like this. This is kind of what like Teespring has, is whoever did this is kind of what it looks like. To where somebody else I used to use was more like thicker stuff they actually like imprinted on the shirt. I kind of liked it. I'll say this though, after you wash it once or twice, the way not Teespring does it, the way the other place does it, is it starts to get a little like rough, and like you can tell it's like something's on your shirt. To where like with this type of print, it's not bad. Like I can't even really tell this is on the shirt.
All right.
So
good stuff.
Yep. I'm excited. To get a couple shirts.
People have been asking. We finally made it happen.
Yep.
And then if it goes well, I love fall gear, so I'm looking forward to.
I will say this.
I'm a beanie hat kind of guy, and one of those people.
So, one more thing, and then I'll end it on the merch stuff. But when I did Drink Beer by Stocks, and I keep saying when, I still do it, but I got so many compliments on the hoodies that Teespring sends out. Okay. My mom says she wears that hoodie still like every night just because it's so comfortable. And it's like the premium hoodie. That's why it's kind of expensive. But I've had some other close friends of mine that have bought it, and they said it's one of the most comfortable hoodies most comfortable hoodies they've ever purchased. So.
And you still get Drink Beer by Stock shirts?
Yeah, so it's not through drinkbeerbystocks.com. To be honest, that was a complete headache, and for the amount of margin I was making, it was not worth my time. So I went back to Teespring because Teespring takes care of everything for us. We just got to kind of get it set up. So yeah, like if you look at
your videos or something like that?
Yeah, like below the videos, there's like little pictures of the shirts. You just click on that and it'll take you there.
Right on.
Yep.
So we're doing some voicemails tonight.
Yeah, we are. So that's the thing too I'm excited about is, with us recently kind of steering away, backing away a little bit from the Friday episodes is we didn't want to leave the voicemails. We're still going to do voicemail episodes. The shitty part about that is I got to do the damn intros still.
I wasn't going to let him get away with it.
And it's live. So you guys are going to see me repeat myself 8 times and see what Brad has to, what he always has to edit out. Nah, it'll be fine. So no, it'll be nice to be able to keep doing these voicemails, but since sometimes our Friday voicemails were sometimes 15, 20 minutes long, now we're probably going to start, I guess, doing a couple more. We may do 2 voicemails one night. We may do 4 voicemails one night. So it'll be a good way to, kind of get more questions out there and just instead of just rambling on for 30 minutes on one topic, we'll kind of get to, dabble in a couple different things. Kind of be like a Dave Ramsey show. You get 6 callers to call in 1 hour, and you get to hear a bunch of different stuff. So it'll be cool. If you guys want to leave a voicemail, there should be a link. Yeah, link in the description.
We have not gotten one in 2 weeks.
Yeah, we haven't. It's been a while. I think it's because we stopped doing them, though. I mean, not stopped doing them, but we stopped the Friday episodes, so no one's hearing the voicemails anymore, and they think they're gone. So maybe we need to try and schedule one weekend or one episode a month for strictly voicemails.
Damn it. They're not going anywhere. They're not going anywhere. They're not going anywhere.
All right.
You ready to turn that AC off and get to this?
I guess so. You're going to have to manage the chat, though. I am horrible at doing that while I'm
guys start distracting the ever-living crap out of it.
Oh, my gosh.
It's cruel, but I always just want to go like this to you.
Oh, that would...
And they just or just do this one too, where you just go like,
oh my gosh.
Hold on, no, go.
Jeez. All right, I'm recording on my mic because I feel like the last few times it has not been on my mic.
Let's go. You haven't done it. Oh man,
I'm gonna be rusty, brah. I'm gonna be very rusty. 37 people are about to watch me screw this up 6 times. They're going to see what a regular JJ Buckner YouTube videos looks like. It's a lot of editing out mess-ups because your boy can't put one sentence together.
Do you make a noise or a twitch every time you screw up on YouTube videos? Like when I edit, every time I screw up, I always go,
oh, no. Sometimes if I screw up more than 3 times in a row, you hear something that I probably, yeah. It's so funny editing back, though, because you can tell I'm truly pissed in the video. And then, in a split second, I turn back and I'm like, so in today, we're going to talk about these 3 stocks. And I literally just got finished cussing myself out. Oh, you mother effing idiot. God, I cannot. I don't know why I cannot ever put a good sentence together, but let's roll with it. You good? What's up, guys? Welcome back to another episode of the Average Money Podcast. So it's probably been a while since you've heard your boy in the intro. Tried to get away from these. Tried to get away from the Friday episodes, but Brad's like, hey, bud, we're still doing voicemails, so you're still going to do the intros. I'm like, gosh, dang it. So I got all these people on YouTube Live watching me, probably going to screw up. I haven't screwed up yet, so knock on wood, let's keep this rolling, baby. But guys, seriously, if you are new to the podcast, my name is JJ. I'm joined every week with my good friend, freshly buzz cut for the summer, Brad Finn. How you doing, buddy?
Little shadows. My usual mini fro hawk.
Boom.
That I grow until it gets weird. I try and time it out. Yeah, it's a little short.
I always used to Tara cut it.
No, I cut my own.
Oh, that's good.
I can tell. ha. You don't
What?
get that freak.
What?
Every time it comes up a conversation, Tyler's like, yeah, Brad cuts his own hair. And they're like, you cut your own hair? I can tell.
Oh, I can tell is what you
Oh,
said.
God, Jesus.
See, I get my hair cut tomorrow. I don't know if you guys can tell on YouTube or not, but my hair is superlicious long, and like my fade is completely gone. It's been over a month since I got my hair cut. I try to go once a month because I really don't like spending so much on my hair, but I do get my hair cut at least once a month. You can't beat a fresh fade, man. It's just such
I'll be getting my hair. Yeah, I'll be getting my hair cut again on Labor Day because that's when I'll have to go back to work.
So what do? You just put in some clippers and run it through your hair, and you're done.
Yeah.
You don't
and
fade
the old start on the number 2, end on the number 8, and then just work my way through.
I like a fresh fade.
It's one just, like maybe a little one on the back.
Yeah.
It's all about ears and perception. Like you got to hear when it starts to nibble. That's how you do the fade.
Got it. Makes sense.
Voicemails today.
Voicemails, but first, quick announcement.
Announcements.
Average Money merch is now live, baby.
Link in description.
Yes, sir. We've got actually a lot of people ask for the merch. I had a lot of people ask for like hats and stuff too. They're not available yet. I actually reached out to Teespring because it looks like you can do hats. It shows pictures of them, but I can't get it to add to our store. So I'm in the process of figuring that out, but hopefully that gets fixed within the next week or so. And hats and beanies will be available hopefully soon.
You watch Matt Diavella's channel?
I do not. I've seen I've seen a couple of his videos, but it's been a long time. He's like a
self-help kind of like a Nathaniel Drew kind of guy, but
solid content.
Very good minimalist. And
yeah.
He has like 5 of the same shirts that he wears. He wears the same shirt every day. And he took like 2 or 3 weeks off and he came back in his video yesterday. He's like, all right, the elephant in the room. Some major, major life changes. I changed my shirt. And then like it automatically it flicked. And I was like, oh my God, you're not in a dark gray t-shirt that I've been watching for the last 2 years. I tell you that to tell you this. When I start wearing Average Money stuff, everyone's gonna be like, where's the Dubco shirt? Because I literally only own shirts of businesses that I've been a part of or schools that I've gone to. Like, so yeah, the Dubco shirts. Sorry, Chris. We might have to move some of those aside and get into the Average Money merch.
New merch is in the house, but it turned out pretty good, man. We kind of went with like a minimalistic type feel with it too. I
try not to overthink it.
Yeah, I think it turned out pretty good. I do. If you want to rep the Average Money community, help out the podcast a little bit, feel free to check that link in the description and get yourself some nice merch. But guys, we got voicemails today.
Yeah,
it's been a bit, but so here's the thing. So since we don't have Friday episodes anymore, Brad and I decided we're going to start doing like multiple voicemails and maybe do like a voicemail dedicated episode once a month.
Yeah.
And just kind of wait and see how it goes. But quickly we'll say this. If you guys have a question that you want us to answer here live on YouTube and for the podcast, there's a link down below in the show notes as well. Click that link, leave a voicemail, and there you go. So we got 2 tonight, Brad.
Yeah, 2 that were similar, yeah?
Yeah, kind of real estate related. There's some VA stuff in there a little bit. Some house hacking, investing, and there's a lot of good stuff to talk about in these two voicemails. So you want to just hop right into it?
Are we going back to back, or they're pretty similar where we could?
No, we'll do one at a time. We'll do one.
And then if they relate, we'll just reference the other one.
Well, no, we're gonna play both.
Or back to back.
No. We're gonna play one. We'll talk about it.
Guys, we're doing this live.
We literally haven't set this up yet. We're gonna talk. This is my thought. We're gonna play one. We'll talk about it.
Yeah.
And then we'll play the next one, and then we can relate to things if we need to about the first.
I just said that.
But I thought you meant play both voicemails back to back and not
play the voicemails. Oh, koozies. Play the voicemail.
Okay. So
just the first one.
Yes, just the first one. I'm not playing the second one after that. So just play the first one.
You're saying Pam.
So like Pam as in Pamnm, right? Pam and
Pom.
Swami, Swanin, Slamis. Oh, check the briefcase. Samson night. I was way off. I think we say that same line.
Play the voice.
Okay, here we go. First episode, our first voicemail comes from Greg.
Hey, guys, name's Greg. Backtrack, listen to your podcast. I'm currently in the armed forces. I used my VA home loan to get a house up in Virginia, $177,000, 2.625 interest rate. I'm only going to be there 5 years. I was curious, how long do you think you should have a home before you sell it if you're trying to make some profit?
Great question. So Greg's question is how long to live in a home before you sell it for some profit. First, Greg, thank you for your service. Appreciate it big time. I definitely got to start with that. So, Brad, you want to start off? You want me to take this one first? Or, I mean...
I can start. This one seems to be pretty cut and dry for me, but there's something that I do want to discuss. Okay. So, he said 5 years, which is awesome. I want to let you know that, I don't know, I know what let me just start that whole train of thought over. That and then we did, and what I wanted to mention.
There's some back New York stuff getting ready to come out right there. That accent.
No, okay.
Go.
Because I know what the live and flip is, I totally only have one answer for this. Okay.
That's fine. Go.
And I'm laughing because I just edited a bunch of stuff out, everybody. I'm sorry. If you don't want to pay capital gains on your profit of a sale, you have to live in that house for 2 of the first 5 years you live there, or 5 year period. So when you ask, how long should I live somewhere before I sell it? My first gut, like right off the cuff, is going to be, hey, you need to live there for at least 2 years. But you're allowed to live there. Fucking dogs.
Hang on real quick, YouTube. This is the stuff that happens every week when we record before we went live on YouTube. Just imagine if we had like 20,000 people watching us right now. This is the joys of coming to watch us live on YouTube. Go ahead. Finish. Yeah, go.
You're allowed. Okay.
Okay, go.
Jeremy he probably nailed it right on the head. You're allowed to live there and then go and live somewhere else, and then like rent it out to your friend for a year and then come back. As long as it's your primary residence in 2 of the 5 years, you're good. So and I mentioned before, like the live and flip. I know people in this community, and they literally buy like a fixer upper, and knowing that it's not going to be a true flip, it's going to be a live and flip. So they'll find like a bad house in a good neighborhood. They'll live there, no rush. They'll fix it up over 2, 3 years, maybe even 4 or 5. And then they're going to sell it and flip it that way. And they won't pay any capital gains on that. So that's kind of where I would just say a minimum of 2 years.
So I like that a lot. Because the capital gains tax aspect could be a huge deciding factor in when you want to sell a house and whatnot. So there's a couple things that kind of come to mind about this, because I've heard a lot of people that are traveling for work, especially in the service. You'll hear a lot of people who will move somewhere for 3, 4, 5 years. They'll buy a house, and then, they get, orders to go somewhere else, and then they move and they do the same thing again. And they go buy a house and they sell the other one. It's just kind of like a repeating process. So I want to touch on your aspect first with like the live and flip scenario. I think that is an awesome idea. If that's something you want to do, because there's going to be some work involved in that and whatnot, and make sure this, the spouse is on board as well. But I think that's an awesome idea, especially if you can use your VA to get in there. And there's something I don't want to get it too far ahead of myself, because there's something I want to mention in the next voicemail. But with the live and flip, and Greg says he's going to be living there for 5 years. The only thing that I think could be like a concern or a risk or something to think about is you want to make sure that you have an exit plan. In any big investment I make, especially in like real estate, I always think of an exit plan of what I want to do in case something goes not the way I planned. So probably Greg, if he goes and does a live-in type flip property, buys the property, fixes it up for the next 5 years, something that's distressed that needs some work. The problem with that could happen is, let's say 5 years down the road we see another real estate market crash, right? And
Right.
now he may have bought in at a lower value and getting some built-in, equity as soon as he purchased the property. And now as he's built, fixing things up, equity's going up as well. But then if you see that crash, a lot of that equity, if not all of it, could get wiped away. So have an exit plan. Know if you are underwater on this house because the market crashed and you only had, $20,000 worth of equity from what you've built up from fixing it up because you got in with a VA, which is 0% down. So technically you have no built-in equity yet unless you bought the deal right. So what could happen is if that market would crash, you need to have an exit plan. Be able to, take the loss if you're underwater and just pay the difference to get out of the house. Or, which just kind of leads me to the next portion of this voicemail for me, is think about what you would do if you didn't want to sell it. Could you rent it out? So one thing I'm going to say is this could be another great way to invest in real estate as someone in the service, a service member, is you could be using these for rentals. Every time you move somewhere, this could be a potential rental property. Now, again, this has to be property that you've done kind of some numbers when you move into it. And now if you're living there for 5 years, rents are going to probably change quite a bit in 5 years. But have a game plan, kind of understand numbers. And then also as you're living there, be vetting property managers in your area. Call them, take one out to lunch if you can, ask questions about what they would do. There's some good blog posts out there you can read on like questions to ask your property manager. Just do a Google search and have that in your back pocket. That can be an exit strategy as well, saying like, okay, well, if the market crashes and I wanted to sell this house for a profit, but I'm underwater right now, 5 years down the road, I'll just rent the thing out until the market, the market kind of settles and starts working its way back up. And then if the rent's going fine, I'll keep it as rental. If the property manager's taking care of everything, there's nothing to worry about. If not, sell it a couple years down the road and recoup your losses and, sell it at break even or for a little extra.
I kind of did a live and flip by accident with my first house because I had no plans of ever like leaving that house, but I bought a fixer upper and then I sold it like 6 years later for a pretty good, we got a pretty good profit, but you said something that still like drives me crazy to this day. And it's the fact that I should have just kept it. I should have figured out how I could have made both work. So I rented it. So I like that avenue too. Like I'm thinking about, okay, you get out in 2 years, but you're saying, hey, if you're going to buy something, don't have the goal, like be just 5 years, figure out, plan B should almost be to have to sell it to get another one. Plan A should be fix it up and then be able to rent it for more. See, that's how you think about owning real estate. And I'm more of like a numbers and an analytics guy.
So with that, another thing I want to mention is, kind of some more risk to think about and like proceeding with caution. Now I know Greg said he was going to be living there for 5 years, I think he said. But I also want to talk about a quick scenario of like, well, what if you're going to be ordered somewhere for like 1 to 2 years, maybe even 3? Do you even buy a house then? Or do you rent for 1 or 2 years? Are you going to try and do a live and flip? Or are you just going to buy a turnkey property and hope that the appreciation goes up? Those are all things that you can do, but there's risk involved with that. And not just on like relying on the market to increase and appreciate your property. You guys got to think as a homeowner, right? First of all, with being, a VA loan, I think the VA loan is a great loan if you're utilizing it for an investment, property, because it can be a little dangerous not having any equity backed. I know there's like entitlement and stuff with the VA loans and whatnot, but something I want to mention here is you got to think about when you're owning a house, how much money that could actually go into that house that's just maintenance and upkeep and fixing broken things. That could eat into your margin whenever you go to sell that house for a profit. Because let's say Greg buys a house that's turnkey for, I'm just making numbers up for simple math, for $100,000, right? Every year, let's say his property goes up 3%, so 3,000, 3, 6, 9, 12, 15. So let's say it's 115 after 5 years. You could easily spend $15,000 on maintenance costs, fixing things and doing upgrades around the house.
Oh yeah.
So that's something to think about.
Right.
Like, for example, as soon as I moved into my house here, I had to install this favorite thing that's in my house that Brad loves, my AC unit. That was a $2,500, $3,000 expense. That's 1 year of appreciation in that example. So that's things you got to think about too. You can't just, I hear so many people say like, oh, I'm just going to buy a house and then, I know it'll go up and that's it. There's so many other factors that go into investing in properties and numbers you have to think about to where, and if people don't account for it, they may think they came out pretty well, but after everything's said and done, they may not have even made any money. They may have lost money depending on how much they've had to put into it. Now, I'm not trying to sit here and say like, don't do this, because I'm a big fan of investing in real estate. I just like pointing out all the risk, that's involved to make sure somebody really does understand what they're getting into. I don't want to scare anyone by any means, because I think you should take risk, and try to figure it out just as long as you have a game plan of how to handle everything.
And Jeremy in the chat, he mentioned the 1031 exchange. He also made fun of me for drinking water tonight, but 1031 exchange is just going to be pretty much strictly for real estate, for rental properties. And this doesn't really, the live and flip is more going to be like the primary residence, because those rules and everything and the capital gains and things change when it's an investment property versus your primary residence.
Correct. Yeah. Yep. Good point though, to bring that up. So
yeah, I mean, so you brought on the risks, but definitely at least 2, right? Because I mean, if he turns around and sells it in less than 2 years, he's got to pay on any of the growth.
Yeah, I mean, he'll have to pay on capital gains. So I mean, like, even if you make money, like we always say, Brad, like I don't necessarily want taxes to scare me away from making a purchase, because if I made $1,000 and I got to pay whatever that would be, 20-30% on that, but I still get to keep $700, then that's $700 in my pocket I didn't have, if I wouldn't have done that. So I would say, yeah, I agree with you. Like, if you're gonna buy a property, plan on holding it for that no capital gains tax if you're living in it. Just plan on doing that, because unless obviously circumstances come up. But I think that's a good starting point is 2 years for sure. And then think about everything else. There's different avenues you can go down once you buy a property. You can house hack it, you can live and flip, you can do turn it into a rental. I think vetting PMs, if I was in the military and I had even a little thought of real estate investing, wherever I was at, and if I had a house purchased or I thought about buying one while I was living there, I would be talking to some different property managers. Another good way is referrals. Go on biggerpockets.com, find a forum in your area, do some tag words. You can, if you just type in your city, it'll tag a lot of people. Ask for referrals, or like a local real estate Facebook group. Find a local real estate Facebook group. They're in every major city. Ask for some referrals on property managers there. You can usually get, if you find somebody who's like listed more than once, that's usually a good sign.
Before we get to the next voicemail, I do want to bring in this question because it's relevant to what we're talking about. Justin in chat said, what are your thoughts on just renting long term and just investing the difference in index funds? And then when the investment hits it big enough, use it to pay for rent or things like that.
So I guess you'd be investing like in just a regular taxable brokerage.
Yeah, I think he's asking like, do you need to own a house to be a successful human being?
Oh, I don't think so. I mean, no, not at all.
My brother Gerard is a millionaire and he will rent for the rest of his. He probably never own.
Yeah, no, I don't think there's anything wrong with that. Yeah. See, it all comes down to.
His is more like, I don't want to.
That's the thing.
I don't want to mow the lawn. I don't want to fix the toilets. I don't want to fix a hinge. I don't want to call the electrician. He's like, I don't need at the end of the day to say I have a $200,000 asset that I'm only going to make money on if I die or if I move.
Dude, that's such a good,
that's what he feels.
That is such a good question. And that's such a good point too, because, we'll talk about real estate and stuff and real estate investing, but like, if that doesn't interest you, you don't have to do that. Like, personal finance is personal. If you don't want real estate in your net worth at all, there's nothing wrong with that whatsoever. It's all about what is comfortable for you and what works for you as an investor.
I'll tell you this. We have a mutual friend here on YouTube, Nate O'Brien, and I don't see that guy. And most would say he's doing pretty damn well with money. I can't see him like buying a house.
Yeah.
That dude is going to be renting and bouncing around for a very, very long time, in my opinion.
Yeah. The guy can't stay in one spot for more than a couple of days. Hey, I'm going to Portugal today. Going to Spain tomorrow. Hey, I'm back in Tijuana. What's up, baby?
He's all like,
he's crazy.
I don't know. So I don't think it's a big deal. You just gotta do what works for you.
Yeah, I agree.
All right, buddy. What's that second voicemail that we got coming in?
Yeah, so next voicemail comes from Sean. Let me pull this up here real quick.
Hey, Average Money. It's so great to be able to leave a voicemail. Thank you for everything that you guys have been able to give everyone for the last few years on YouTube. So I currently have a house that's worth $375,000. I bought it for $300,000. I've refinanced it already once and a second time coming up here in a week. My current APR is 2.50 and it'll be 2.25. So my mortgage is lowering and things are looking great. However, we were seeing if we should do a cash out refinance through the VA and be able to take that profit and use it towards another house, or be able to sell the house outright and be able to take that profit. Or the third option is just to be able to rent out this current house and save up like everybody else does for a down payment, either a 3.5 or a normal 10 to 20%. If you can give me your best advice, that'd be fantastic. I appreciate everything. I got a lot of people telling me what to do with the VA loan, and I just want to be able to make sure I'm doing the right thing for us, making sure that we're able to lock in the profits that are available to us and set us up for success. Thank you, guys.
Great question. So first I want to say this. Full disclosure here. Brad and I have never used a VA loan. Correct, Brad?
Correct.
We're both not service members. So Sean, thank you for your service.
Yes.
Really do appreciate it.
We're speaking from only what we've read and talked to other service people about.
That's correct. And I also, before I even get into this, I have a good friend of mine who is a former Marine, fellow Missourian, and he has a blog and YouTube channel called From Military to Millionaire. Big time real estate investor, very smart, intelligent guy. He has a couple good blog posts that Brad and I are going to link to the show notes to kind of help inform the fellow VA loan users out there to get a little bit more information, because I can speak on what I know, but I'm the type of guy where I don't want to like act like I know what I'm talking about if I don't. Right. So I have some good points for this one, but as far as like VA stuff goes, I'm not the most experienced in this, so we'll kind of leave it at that. But I mean, Brad, what do you got, man?
So some things that like just jumped out at me, because first, the refinancing, I've wanted to do that in the past to lower my interest, and this might be a situation that's different for him. So that's kind of like that disclosure that you just said. Usually from what I've been told is like the closing costs, it takes about like 5 years to make up the refi closing costs, at least in my neck of the woods up here in the Northeast. So I'm thinking to myself, if he's refied twice, he might be like into that for almost 10 years on a break even on that, especially to go down like 0.25%, but still stupid low interest rates on not a huge mortgage, a manageable mortgage of 300,000. First, when he was like, should I use the VA loan to cash out refi to get another property, I immediately put my foot on no, like brake pedal, like no, like you are not going to take out like borrow, like I just like no. And then I'm thinking to myself, Brad, you have a freaking HELOC and your HELOC is more interest rate than a VA cash out refi would be. So then I was like thinking to myself, yeah, you might be in a great opportunity to do a cash out refi, to use the equity in your home. And like, because we know the primary residence isn't really an asset because it doesn't help you make money. Well, HELOCs is one way that I've used my primary residence to help me make money. And this might be, instead of calling it a cash out refi, why can't we call it a really, really low interest HELOC? I mean, obviously there's difference between mortgages and HELOCs, but I don't think I have a problem with it. I'd probably have a problem with it if it was like cash out refi to put in a patio set in a pool, like, and pavers in a pool, or, you know, to consolidate maybe other debts. Like, I'm not a huge fan of moving debt around just to like avoid a little bit of interest here and there. But if he was going to use, and I feel the same way about the HELOC, right? Like I didn't use a HELOC to do my kitchen. Like
Same.
I didn't, right? Like I'm not wanting to like, I'm not okaying debt to bring on more debt.
Yeah.
Just so you could pay it at a lower interest rate. Like just because it's on sale doesn't mean you have to buy it. if his main intention, his only intention would be to cash out refi and better his situation to get another real estate property and another source of passive income and things like that, I'd have to say I'm almost for that. I don't think I'm against that at all.
I'm not either. I agree with you on that. There's just a couple things I want to add to it to kind of give a couple more things for Sean to think about.
Because
go ahead.
Before you do that, I just because, and that you're probably going to talk about this, is maybe there's a certain mortgage on your primary residence that you'd feel more comfortable with this. I don't know. Were you going to say anything about that?
No, I mean, I guess you do have to have some sort of equity built in because most banks aren't going to give you a cash out refi unless you have at least, I think it's at least 20%. You have to have an equity that they won't give you, because it's the same way with our HELOC. On my HELOC, I didn't get the full amount of my HELOC in equity. I only got I think it was like a 75% value of my total appraisal of my house.
Right.
Because they want to keep some of that equity locked in there in case something happens on my end as the borrower. So it really, I mean, to answer Sean's question, and thanks Sean for leaving the voicemail, is it really comes down to the risk you're willing to take. And I know he gave a couple different scenarios in there about what he was wanting to do. Either leave it as a rental, cash out refi, sell it, and go buy another property. So with the cash out refi, Brad, I agree with you. I think if you're going to use it for an investment, I'm okay with that as long as it's not, something that you're getting into where you think it could have some issues with, because that's always a scary part about borrowing against your primary residence is if something goes south, that's your home you're talking about.
Yeah.
So you have to make sure that you are completely aware of everything that could happen. Now, for me personally, I like Brad, I have a HELOC on my property. I have access to cash. It's a line of credit that I can pull whenever I need to, no questions asked. Now, with that, I know my ways around of getting out of that if something were to happen, because with a HELOC, it depends on your loan, but like with mine, after 10 years, actually, I take that back. It's not after 10 years. It's a varied rate. So as soon as I borrow that, once that money's out there, that rate's variable. So if we see interest rates shoot up, that money that I have out on my line of credit is going to shoot up with the interest rates going up. Now, a cash out refi is a little different. If you have a fixed rate, you're doing a cash out refi, that's the benefit of that. The problem with that, though, is if Sean doesn't have an exact plan for this money he's going to pull out of a cash out refi, he's practically paying interest to keep money in his savings account. So that's kind of a downfall with the cash out refi,
right?
Is now that you have money in the bank that you're sitting there and you're almost like eager to use it because you're paying interest on it anyways. Because once you pull that money out, that's not like, the cool part is you can hear me?
Yeah.
Okay, my audio just cut out for a second.
Yeah.
The cool part about that is like once you pull that equity out, it's yours to use. You don't pay any taxes on it whatsoever. But once it pulls out, it goes back to what I was saying. You're paying interest on that money.
Right.
To where like with the HELOC, I don't pay interest on any of that money until I pull it out. And I can pull it out whenever I need to. To where a cash out refi, you can only do once you set that refinance up. So that's a big thing to think about is if you have a plan to use that cash out refi, maybe go forward with that. If you're looking for rentals and then within the next 60 days, 90 days, you're probably going to buy a property, go for it. If it works within your risk level and the numbers work and all that, go ahead.
Do you think you could use a cash out refi as a proof of funds? I don't know. I'm asking you. Because you've gotten more proof of funds before. I know you can use a HELOC in the state of New York as proof of funds.
Well,
if you got an offer or quote for a cash out refi, do you think you could use that as proof of funds?
No, it would have to be
pretty liquid.
It had to be done. I mean,
yeah.
Like if you're in the process, I mean, I guess you could possibly work out a deal, but like in today's market, there's no way nobody's gonna accept a possibility that you're gonna get your cash out refi and everything's gonna get approved. Now if you can work that into where your time frame within those 30 to 60 days of closing, your cash out refi is going to happen, and you have that money liquid and available, that would work. But you just got to time your deal right and everything to be able to do that. Like you can't wait until you find a property to start your refinance to pull that cash out. Because unless you could figure out someone who's willing to make that deal, then that's the tough part about that. Now, when it comes to the VA loan situation, well, before we get into that, I want to say probably what I would do in Sean's situation. Now, again, I'm not a big VA guy. I don't know all the ins and outs. But if it was me and I don't know too much of his income or anything like that, I would first be checking numbers to make sure this $375,000 house is even going to cash flow as a rental. Because that's a pretty expensive home to rent out. And that's going to also be the first property that you can't get rented if we do see a rental market crash. Because I would kind of consider now. Just again, did he say where he was located? Because that could determine everything.
I didn't catch it. No.
Okay, because like if it's $375,000 house in New York, that's a little different than one in my neck of the woods. A $375,000 house in my neck of the woods is a mansion. To where that's not a mansion in New York. So maybe it's a little different. But based on where I'm at in a lower cost of living area, I would say that's something to think about. If this is a more expensive property, this may be something that may not rent out in case of, I keep throwing like, I'm getting all risk, in this episode.
No, because it makes sense because I know in my primary residence, I couldn't rent it for what I need to break even.
Yeah, exactly.
My property taxes, my insurance, like if I didn't have a mortgage, yes. But like while I still have a mortgage, I can't cash flow on this property. I just couldn't do it.
Yeah. And that's the tough part. That's kind of leads me to the aspect of like, depending on where I want to go, I may be selling the property and using that for. And again, God, it was so hard to remember everything. Was he saying he was going somewhere else? Was he moving somewhere else, or was he staying in the same area and just thinking about using the profit from that property to go buy a different house? Because like what I would like to do.
Yeah, he wasn't saying he was going to be moving.
Okay, so what I would maybe like to do is, if I love the house I'm in, that $375,000 house, I wouldn't change anything. I'd stay living there if I could save money on top of living there. Now, if this house is 50%, if that mortgage is 50% of my take-home pay, I'm probably going to sell it just to get into a smaller home, a more affordable home. That way my savings rate can explode, and now I can start saving up for a down payment on a rental property,
If it did become a rental property, are we both on the same page? That's like then cash out refi. Like if somebody else is paying that mortgage. I feel like I'm almost always for like get as much of your own money out of the deal as possible.
I guess it just depends, man. Like, dude, I'm so risk adverse. Like, I could be pulling money out of my rental property too, but I just, dude, debt. Like, I know there's good debt and I get all that, but like, I am personally not looking to build a real estate empire. I'm not looking to make $200,000 a month from my real estate properties, because to get to that level, having the income that I have, that would have to I'd have to take on a shit ton of debt to where I'm not sleeping at night. But I may be covered at all by my rent payments. But look what happened with COVID. Look at all the people who stopped paying. Like that's like, I just can't. I couldn't sleep at night having some of these. Like I know guys on YouTube who are my age and they have millions of dollars in debt. Now they're granted making a lot of money in cash flow because they did their deals right, but I still couldn't do it. I could never be $3 million in debt with real estate properties, even though they're paying everything off. It's just not in my blood. I would not sleep right. So those are things to think about too. It's a tough one, but I will say this. If you can do a VA house hack, that's where you can make a lot of money. Because think about this. You buy a home, zero money down, VA, that's zero money out of your pocket. Live in it for free while you're renting out the other rooms, or while you're renting out the other sides, it's a duplex or whatever. All while you're saving money on living expenses. All while that money is going into another savings account. It's another bank account that's going to buy your next property for you. That's, I think, like the best way that I would probably try to set it up is using that VA loan to house hack a property or a multifamily property.
and as we mentioned, we only have like limited experience with it.
Yeah.
The guy who just bought the house next door to me, he's a Marine, and he used the VA loan. And kind of when I asked him like about it, like, what's this about? What's this, that, and the other thing? He's pretty much like, all you really need to know is that it's like zero down and, zero PMI, no private mortgage insurance. And I was like, okay, cool. He goes, well, I'll tell you the one mistake that I see people in the military making. So this is through his words, not mine, is that people use the VA loan as an excuse to buy a house that maybe they can't really quote afford, or to buy something that, isn't best for them. He said he almost wishes they told him what a VA loan was after he had already made his decision, because he's like, if I would have bought a house with the perception I was going to have to put money down, and that would help me narrow it down to really, really what I needed. And then at the end, boom, I found that out. And then I was able to put that money that I had saved to the carpets. And he's like, it kind of gave us like a feeling of a little bit of a blank check. And he didn't buy it above his means. They're very like actually pretty good. That's why we're talking about this with him, because money isn't taboo already. But just watch it. Not all things are like as good as and true as they seem. Is it an amazing opportunity for veterans to get into a house? Yes. And the beautiful thing is, if you're a little bit smart with money, you can really, like JJ just mentioned, you can really, really use it to your advantage, but don't use it as like a crutch. Use it as a bonus on kind of like a pension. Like when you get your pension, you're thinking to yourself, oh, that's dope. I love that. I'll take that all day. Buy the house. Like, I'm going to put 20% down. I'm doing this. And then have them be like, oh yeah, not to mention you guys have a VA loan. You don't have to put anything down. Then you're like, yes, now I can really, really put myself ahead of the game.
Dude, that's such a good point. I'm so glad you said that. Like, if people who use the VA loan didn't know they could put 0% down, I guarantee you so many people would be shopping for homes differently.
Mm-hmm.
Because that's a big factor in buying a home, man. And I personally believe when it comes to a primary residence, you probably should be using 20% down, even if you have access to a VA loan, unless you're going to do some sort of house hack or you're wanting to get into real estate. If you're just buying a home and that's it, I'm still saying you probably need to be able to afford 20% down on a property.
Yeah, and even if you had that money to put down, because I'll tell you this, I used to like at first glance, I might think, oh, that's too good to be true. Like I got to pay all this money down and they don't have to. At the end of the day, you still have to take out a mortgage. So if it's $100,000 house and I have to put $20,000 down and they don't, well, now I have an $80,000 mortgage. They have a $100,000 mortgage. So it's not. Yep. I'm still okay. Like that, it's not a penalty for you to have to put a down payment down. Right. You're not being penalized because you're not in the military and you have to put this down payment down. They're giving our servicemen and women the opportunity to get a jump start after coming back and, protecting our freedom. So don't hate on them for having a 0% down,
So true. Well, and then also, it's something to think about with having a lower monthly expense. When you put some of that money down, that lowers that mortgage payment, like you were saying, and you have a smaller payment going out every single month. So that's another good point that's why, dude, sometimes I know people I listen to don't agree with this, but sometimes I like putting 25% down on single family home and that's what I did with my one I bought, because one, it's more equity in the property. It's a lower mortgage payment. It's more cash flow. So it's kind of the best of both worlds for me. It's less debt I have to my name, and it's more cash flow I have coming in on a monthly basis, and it's a lower expense I got to pay every single month.
We digress a little bit there.
Yeah.
But I think we didn't just put those together because they were both VA loans. I think one kind of built on another. And the first one kind of was like the basics of what our options are. And then the next one was more of like using those options to the best of your abilities.
For sure. Yeah, that was fun, dude. I like doing the back-to-back voicemails.
I miss the voicemails.
So do I, man. They're so much fun. It's cool to hear the listeners' voices and being able to ask the questions. What do you want to do, man? You want to wrap this up and do some more questions, chat on live YouTube, or what?
Yeah, no, it was a shorter episode, and we're not going to just babble here just to make it a long episode. We want to make sure we got some value. And yeah, man, I'm good to go. If you want to sign us off, I will say, JD's doing the sign off. Thanks for listening, guys. And as I'm sure he'll mention, new merch, if you want to support, please check out that link and please leave us feedback, good, bad, indifferent, right? Don't tell us they're the best thing in the world, that they suck, because we'll keep doing sucky things.
That's so true, yeah.
Unless you give us some positive feedback. And people have been sending us ideas as well, too, for
Mhm.
merch. I want to thank those people as well. People like designing little things and reaching out to help. And
let us know what you like to hear.
Yeah. It really helps us out. So the more feedback we get from you, the better.
Yep. All right, guys. Really appreciate y'all listening today. Thanks to Greg and Sean for sending in those voicemails. I don't have any. I think you kind of took everything I was going to say, dude. You kind of nailed it. That's it, bud. But no, I mean, thanks to everybody who joined us live on YouTube. Brad and I are going to stick around and answer some questions in the chat and just kind of chit-chat for a little bit. And if you guys want to catch the next one, usually we do them every Wednesday at 7:30 Central Time, 8:30 Eastern Time. You can catch on here, see our live, unedited, recorded version of the podcast. We had some hiccups today in the...
Yikes.
But no, get on over there, subscribe to the YouTube channel, join in on the chat in the next live stream. And until next one, you guys take care.
Sweet.
Cool, that was fun.
Those VA loans really are really good for people.
Yeah, they are.
You know.
Full show. So I'm gonna save this real quick, and then we can get into some chat. If you can look at it right now while I export this, then we'll be good.
Let's see, I gotta come back up here. People chatting. Dave said, "Did you wear the NASA shirt for the Blue Origin launch this morning?"
I did. I forgot to mention that. Who said that?
Dade Dutton.
Yeah, I put this on earlier today because of that. So good catch there. I was gonna mention that earlier when we went live, but I forgot. That's funny.
You also said you were gonna mention that you got spagoogled last night.
I didn't mention that. I forgot. I was so worried about the damn intro. That's why I hate doing intros. I can't be as like normal, I feel like.
I'm not drinking because my wife is out, and when I'm alone with my kids, I don't drink.
Yeah,
but if she gets home in the next 10 minutes, we're going to be boxing some beers. She said she'd be home by 10.
So let me tell you this real quick.
Yeah.
So was it Saturday night? And I'll tell you what, guys. Like, don't get me wrong. I like drinking beer. I'll turn my AC back on. This is ridiculous. You know, I don't ever really like tie one on or say, you know, I'll drink beer and stuff every night, like do this and drink when I'm barbecuing, but it's only like a couple drinks. I never really like get drunk. Boy, oh boy. Saturday night, there was a different JJ. I don't know what happened. It was like college JJ came back and just took over. We went out with a couple of friends of ours. All of our friends all of our close friends have like the same kids as our kids' age. So they all had babysitters. We all haven't been out in a while. And we're like, let's go to the wineries. We have some really nice wineries where we live. And so we did some winery hopping, went to a brewery, and we started at 11 o'clock in the morning. Now, most of you guys probably don't know this, but I'm not too much of a day drinker. I'll do day drinking, but if I stop, then I pass out. So I have to keep going, which in return usually is a bad sign because then I just get swasty-faced and I don't even know what's going on by, 6 o'clock at night, 5 o'clock at night. I'll just say this. The first winery, we ate lunch there and we were there for maybe an hour and a half. I drank a bottle of wine myself and I still had 7 more hours to go.
Rosé? What are we drinking?
Chardonnay.
Dry.
It got me, dude. Also, I like dry wine.
Oh, and wine's a dizzy drunk too.
Dude, by the end of the night,
like gin and tonic drunk.
Oh boy, and I drink those too. I'll be honest.
That was Saturday, and you're still off the wagon.
Yes. You
got a 3-day hangover.
I'm good now. I'm officially back to it, but yesterday my stomach was still hurting. Dude, it was vodka, Red Bulls, gin and tonics, beer, wine. I mean, everything was getting thrown at me, and I just, like I said, college JJ came back. It's been a while since this old dad has had a little night out, and I barely remember getting home. I FaceTimed my mom and dad at like 12 o'clock at night, and just.
Did we speak? I don't remember talking to you.
Oh, dude.
Can't drink all day if you don't start in the morning.
That's for sure, and I definitely did it.
I mean, we all have those days. I'm talking. They never heard the word schmagoogled before.
Schmagoogled.
What the big ones here, we used to use ossified. Depends on like what friend I am. Like, you know, when you text some of your friends, you have a different word for blackout.
Yeah.
So like, if I'm gonna text P Cacciatore, I don't say I was ossified. I'd say I'm schmagoogled.
Schmagoogled. Never heard of that.
Schmagoogled.
Schwasty faced. That's probably the most common one I use. Yeah, that's probably the most common one I use.
We'll use smack too, because we used to play smack the bag. You ever smack the bag?
I've smacked the bag a few times. Yep.
You do that with wine too. You can smack a bag of wine too, right? Because
what'd you say you did it with?
With the tea.
No, we do it with wine, box wine.
Oh yeah, smack the bag.
Smack that bag, baby.
Well, good for you. I mean,
no, it wasn't. Oh, dude, I should have. Like, of course, everyone says this, but like, if I could go back and take away like 3 of those drinks from me, I probably would have still woke up not feeling the greatest, but it wouldn't have been the old getting sick the night before and the morning after. That sucked.
Oh gosh.
Look who's back. Right after talking about the huge hangover.
Jeez. I might have to go get a beer.
Yeah, Brian's the one who hooked Brad up that one night. Oh boy. Oh,
you guys ever been to GABF, the Great American Beer Fest? I actually have some hardware from that festival. It's usually like right when I start school, and we'll be going to FinCon. So I don't think we'll ever be at the GABF.
FinCon. That's
but we might.
Fun.
Yeah.
We'll have to do maybe we'll do a live in-person YouTube podcast recording, and maybe we'll have Jared on. That'd be a cool episode. He's got a cool story. He's doing a little mini retirement. Quit his job.
Good for him.
Yep.
I will say, for the people that are talking about GABF, if you don't know, I had the brewery, but I will flex a little bit. When you go to GABF and you're a brewery owner, they take care of you. Oh my God, the Great American Beer Festival. I think it's I don't even know how many days it is to the public, maybe like 3 or 4. I was there for 2 weeks. Because you got to get out there, you got to deliver all your beer. Oh man, if you're a beer drinker, I feel like I have a couple of things on my beer drinking list. Actually, yeah, I have a couple of things on. GABF should be definitely up there in your like number 1 American drinking thing to do. Either that or St. Patrick's Day, Savannah, Georgia. But I also want to go to that on New Year's Eve weekend. They have the the World Championship for darts. Do you ever see that at like 3 o'clock in the morning?
Yes, I have.
When he's like triple 20s, and you look out in the crowd, and it's just like picnic tables of beer, and it's just pictures of beer. 190. I want to go to that.
Looks like a blast. I love darts, by the way.
It's New Year's weekend in London.
Oh wow.
So you have to do New Year's in London.
Dude, that would be
triple 20.
That'd be sick. Shout out to Brian. Another super chat. He says he's watching us in the NBA game. Suns, Bucks. I'm not an NBA watcher, but
there's still basketball going on?
Yeah, I think it's game 6 tonight. Bucks lead. Bucks lead 3-2.
Sierra Nevada and Adult Playground. Same as if you are in the if you're in the Denver area. I just did Northern Colorado, so not Northern, I guess Northern Denver, you'd say. But Avery, I love Avery. Tasted Weasel. Some of the smaller ones I did there, I did Lewibby, which was like an incredible lager brewery. It was really, really good. And
speaking of Avery, Brad told me about that brewery when he was out there, and there's a spot up in St. Louis where you can get all different kinds of craft beer from all around the United States. And I stopped there while we were at the zoo with the kids, and I saw that I was looking for that Avery brewery, looking for some cans. They had a double hazy IPA, 10% alcohol content, strong beer, but I love hazies. Such a great beer.
So good.
So good, but you got to watch it because I think it would get you.
I think I just picked out what we're doing. I don't know if I could not be with my kids for New Year's. Actually, this might still be where they're young enough where we could not be with our kids at New Year's.
Yeah.
Let's go to London for that dart tournament.
We're going to fly out to London for 3 days?
Yeah.
4 days?
Yeah.
Could you imagine us just going to a random dart tournament?
It's not a random dart tournament. It's the world championship of darts.
I mean, I'm not saying I'm not down.
Dude, it's a bracket system. It's like 3 days, like losers bracket, double elimination.
I want to play.
I'm sure there's qualifiers.
Oh my god, dude.
180.
Oh my gosh, that'd be nuts, man.
Robin, Robin said my dad's a darts champ. Has he ever been to that thing?
Yeah.
Even my wife's like, I think I might enjoy that. I mean, your wife's not really a big drinker, but she can have a beer or two.
Yeah, I mean, she'll hang out, she'll party. She's not a drinker.
Right.
Not a big drinker. Now, I will say this. This is another screw up JJ had Saturday night. Lindsay was in the zone. She was tying one on.
Really?
I had no idea.
What she does is she's a wine girl too?
Yeah, she likes wine. And they do is like wine slushies out in the wineries. She liked those.
Too. It's unbelievable.
Those are really
Chris
good.
has like a white Merlot right now, which is like dangerous.
So yeah, I had no idea she was feeling that. When she woke up, she's like, "Well, I was doing having fun. I was gonna, drink a little bit once in 3 years that I'll drink." And I was like, "Well, I screwed that up, didn't I?" God,
is she cool when she drinks?
Yeah, she's like, I mean, Lindsay. She's like she gets like, I mean, she's a pretty sweet girl, right? Well, she gets like even more sweeter. Like, yeah. Or, or she cries. I know she has cried a couple times.
I am a drunk crier. At Mr. Money Mustache, I cried in front of the whole crowd. We all cried together. It was bad. It was bad.
Looks like Mason's got a question. What's your question?
Oh, but he said, he said before that he had a long one. I said, go for it. Hold on.
Here, we'll look
he just said, do I need to repost it? I'll go. Okay. Oh, wait, I think I found it. All right. So he said,
you got it.
I'm looking to buy a single family home this summer of 2022 with an FHA loan to house hack while I finish my
master's
and then I'll rent it out. Okay. That sounds pretty cool.
Mm-hmm.
I'm a Florida resident, but currently living in Georgia. Are there any legal mortgage things that might try to roadblock me? If you're going to call it your primary residence, you have to live in that state. Like, no ifs, ands, or buts. You need to work there. You have to live in that state, right? FHA loan would be primary residence only, yeah?
Yeah, if you're going to live in it. And he said
he's a Florida resident, but currently living in Georgia. So, like, and I've learned more about this with, like, Ryan Scribner going down to Miami.
Yeah.
Like, you have to be there.
Well,
you can't say, like, oh, I have a utility bill. Like, they will check up to make sure that you live. If you are using the benefits of an FHA loan, they are going to make sure that that's your primary residence.
Well, yeah, but I think if he's in college in Georgia and he's going to be moving to Florida like in a year, as long as he like doesn't rent it out and it's just sitting there, I don't see how that could not be a primary residence.
If he wasn't making any money on it,
right?
I think
If he wasn't renting it out, like if he sits on it until he moves there, you could probably get away with the FHA. I talked to your mortgage lender and make sure that's okay. Because like if it's a primary home and you're not earning cash flow from that property, like as an investment, and you can choose to live in your house whenever you want. You know what I mean? Like I could buy a house and not go live in it for a year, but it could still be a primary mortgage. If I don't have another, like if he's living in like the dorms or something in college,
right,
that could be his primary mortgage.
But he can't have a mortgage in Georgia. So he has like if there's any roadblocks, I guess major roadblocks would just be make sure we have that residency thing locked in.
Mm-hmm. Yeah, like you don't want to be getting caught buying an FHA loan on a property in Florida and then going and renting it out before you even live there. Like that could get you in some trouble.
Not good. Sorry, I missed that, bud. I told him to ask the question and then
Brian's got a serious question.
Yeah, awesome. Answer it. He gives us a lot of money.
What do you think about AMC? I know y'all are not in it, but I have been in it since $9.85, and that's all JJ's fault. Well, it sounds like you're doing all right in it, bud.
You're in it. JJ's in it.
No, not anymore. No.
What happened to that one the other day? Didn't you just you sold an option on it? Didn't you?
No, I tried. No, remember? Fidelity didn't let me go forward with it.
No, but didn't you do one in your personal account? Like you didn't click the right one or something like that? Was that AMC?
No, that was Palantir.
Oh, that was Palantir.
Yeah. Now I was going to purchase AMC. What was that? Last Monday.
Yeah.
It was whenever the account officially was open. Or no.
No, because it was after the live stream, so it was
Thursday. And for some reason, Fidelity wouldn't let me purchase AMC, and I'm like, oh, here we go again. But it was just something that had to do with our cash, having to wait a certain amount of days to be fully available because it was our first deposit. But I mean, I guess Brian, you're asking like, should you keep it? Should you sell it? So first and foremost, I don't ever tell anyone when to buy or sell a stock, but I will tell you what my personal thoughts are on it. Excuse me. If I owned AMC with a $9.85 average cost basis, I mean, it depends on really how big your position is. Like if this position I owned in AMC was like 15% of my overall net worth, I'm taking some profits. Like I'm probably not going to keep all of that in there, especially with how high up you are and how much you've earned. Or maybe
what's it trading for right now?
Like 34, maybe 35. Let's look real quick. AMC stock. Oh wow, dude, it's up to $43. It went up 25% today. Holy crap! See, this is the stuff that happens whenever I'm out with Bro Day with Mason. Look at that. Gosh dang it, that just pisses me off. I mean, I could have bought it today, though. Gosh dang it. Oh.
You got me on Wish, though. But
anyways, Brian, this really depends on how much you have, in it. If it was me,
care to share, Brian? Care to share how many shares you have?
Yeah, I mean, like, what are we looking like here? I mean, if it's a relatively small position, just if you want to keep it in there and see if it goes back to $60, $70. If it hit all-time highs again, I would for sure be taking profits. Faux show. I didn't sell. I bought some calls on it back before it was shooting up. While it was on its ride up to 70, I bought some when it was at like 50, 60 or whatever. And I sold around high 60s. I sold and it kept going up. But I had the lock-in profit. I think I made like $2,500, $3,000 that day, just because of AMC, dude. AMC's nuts, man. I just don't get it. I'm hoping Wish is a baby version of AMC. Oh,
you did say last podcast episode there was a little bit of a meme stock.
I did, but what I was seeing today, I had to take a chance. CRSR, was that Corsair Gaming? I think so. Yeah. If I even said that right, Corsair, yeah. Yeah, it's on my watch list. I don't know, like it. I think there's quite a few YouTubers that have talked about it. It's just not something I've really looked into yet. Yeah. So I don't know too much about it to really talk about it, but Chris Blair is a good question. Thoughts on Monday recession followed by Tuesday recovery? What was that all about? Investors scared of Delta variant for 24 hours. Yeah, we kind of touched on that at the beginning of the live stream. Yeah. I mean, real quick, like I think that's just what we're going to see a lot moving forward. We're going to see a lot of volatility, I feel like, this next year.
Yeah.
Especially with inflation coming, a lot of unknowns coming. There's just a lot of unknown territory that a lot of investors are in. That's why it pays to be a long-term investor, because you don't have to worry about this crap.
Pretty confident known is that in 25 years, the market will be higher than it is right now.
Yep. Same.
Yep. So even if you only got $1, put it in, because that $1 is going to be worth more.
Yep. If you're keeping it in there.
Right on, bud.
Cool.
Any last minute questions that we got in? Holy Toledo. Did you see that?
Oh my God. Oh man. Day traded 60 options at $50 for Friday expiration. I mean, dude, you gotta be killing it. Depending on when you bought that $50 strike price.
Dude is a fucking maniac.
That's. Hang on. Here, I'll do this. I don't know if you care. I guess you don't care if I share this, Brian, because you told me what your average cost is and how many shares you have. Let's do this. 3,200 shares. What was this cost basis? 985.
Yeah. Called.
So a 31.
Call $10. Call $10.
31,000. Yeah, I mean,
32,000.
So 32,000 or 3,200 times. What was it at? 42 something. He's up 100 grand.
Yeah,
again, it just depends on your net worth, Brian. Dude, that is huge, man. Heck yeah. Holy crap. That is so awesome.
And that 100,000 heirs sitting here listening to us.
So again, don't know, Brian. I don't know your net worth. If I'm up 100K in a stock like AMC, I'm probably taking some profits. But again, if 100K is chunk change to him and you want to let it ride, if it's 5% of your overall net worth, let it ride. I mean, I don't know. It's so hard for me. It's so easy for me to say that with that not being my money. I knew if I was up that much in AMC, I'm probably taking some profits.
Oh my God.
At a bare minimum, I'm taking out my original 30,000.
Well, I've said,
playing with house money.
I've said on this podcast, if I get to 100% return, there's a pretty good chance I'm taking out my initial investment.
Yeah.
That's sick.
Dude, that's awesome.
Oh, well, now I'll be pumped. Like I watched now that I know that we got Brian directly in there, I'll be watching AMC. Like I'm rooting for you now. Just like I root for my friends that are still holding Dogecoin or whatever.
Yeah.
Yes.
Man. Good call, Brian.
Dude, so wait, are you?
Yeah.
He said day trading options.
Is he
are you
selling calls?
Selling calls on that?
Dude, could you imagine?
What's an at the money? Money?
I'll look for today. It's going to be super high though, because they were up 24%.
Okay. See what 32 contracts at the money today were.
I'm going to do at the money when it closed out.
Yeah. Yeah, because they haven't updated.
Right. So 3,200?
No, 320 contracts.
No, because he's at 3,200 shares. Oh, yes. 32 contracts.
320.
Hang on.
Is it? No, it's 32. It's 32 on 320.
10 grand.
Yeah, 10 grand? Oh, no, for all of them. So we made 10 grand today. He could have made 10 grand today if he sold calls on all of them. Oh, call options. Yes. But are you writing calls? Are you buying calls? Or are you writing calls? That's sick.
No. Hang on a second.
It's 32. It's 32.
How many shares did he have again? That's where I'm getting confused on.
He has 3,200 shares.
Got it.
So he can write 32 contracts. I said 320. It's 32.
Yeah, that's where I was getting confused. So
at
32,
the money, right? Right
at the money, 32 contracts is 10 grand.
Give me 10 grand. 10 grand on a 10 grand on a $30,000 investment is a 33% return today.
Yeah.
Damn. Good for you, Brian.
Killing it, bud.
Thanks for the $5, man.
Yeah.
The 10. Thanks for the $10. He's got balls of steel.
That's amazing.
Dude.
I'm just mind blown right now. That's so awesome.
Yeah.
All right, dude. Let's sign her off.
I'm going to go friggin' make myself an AMC t-shirt. Let's go, Brian.
No doubt, dude. I'm ready to watch that tomorrow. All right, guys. Hey.
Take it easy. Yeah. Thanks, guys.
Yeah, I appreciate everyone sticking around. Hope you all enjoyed it. We'll be here next week, probably Wednesday if everything works out.